Time now for Bloomberg Equality. It's our ongoing conversation about the bottom line impact of diversity. And well, the focus this week is credit scores and how actually they marginalize minorities. Let's hand it over to Scarlet.
Thank you so much, Caroline. The pandemic has left 10 million Americans out of work, forcing people to rely on credit cards and loans to stay afloat. And of course, this at a time when Capital One and other companies are cutting borrowing limits, hurting those who are most vulnerable. Jason Gross, who co-founded and leads credit card company Petal, pushes back against the current system, and he joins me now. Jason, our current credit score system leaves a lot to be desired in the best of times. But right now, people are losing income. They're skipping loan payments. Credit scores, all the same, have been rising. I would imagine that payment holidays from government stimulus is sort of distorting the scores, and things will settle down eventually, no?
Well, I think they will eventually, but the question is, when that actually happens. And what we're seeing today is a tremendous amount of noise in the system, essentially confusing traditional credit scores. As you mentioned, the average score in the United States has continued to go up month over month, even as the larger economy has melted down. It's the opposite of what you would expect to see. And it's left traditional lenders and big banks sort of scratching their heads, not knowing who's creditworthy and who's not, and not being able to make credit available.
So let's bring in the other angle here, because the current credit system also structurally disadvantages minorities, and that stems from a history of banks redlining loans to black borrowers. There are laws against this now, but the younger generations are still paying the price, aren't they?
Yeah, I mean, the reality is that the current credit scoring system has long disadvantaged Black Americans and other people of color. Black Americans today are 2 times more likely than whites to lack a credit score. And when Black Americans do have scores, they're lower on average, even when you control for factors like income. The credit scores reflect the past, not the present and not the future. And as you mentioned, the past includes decades of systemic racism and inequality in the financial system. One example, redlining constrained access to mortgages for Black American families for decades. And without the ability to get a mortgage, these families weren't able to build credit history and credit scores. So, today, the easiest way for a young person to start building credit is with help from a parent. But if your parents were denied access to credit decades ago, well, you could be starting your financial life at a disadvantage. We badly need new solutions to level the playing field and address some of these systemic inequalities.
Okay, so let's talk about some of the solutions. One of the alternatives that you say to the credit system, the credit scoring system, is something called cash scoring. How exactly does it work, and how are you using it at Petal?
Yeah, so as I mentioned earlier, there are tens of millions of Americans, disproportionately minorities, first and second generation immigrants, young people that are new to the system that don't have credit history or credit scores, and they have trouble qualifying for credit as a result. So instead of relying on just credit history, we've developed a more data-driven approach, which we call cash scoring, that translates people's existing banking history into credit history. So the money that you make and the bills that you already pay can help you qualify for credit. It has the potential to make the system a lot more inclusive and also more accurate through market volatility like what we're seeing in the COVID pandemic.
How often does cash scoring tell a different story than the credit score that we currently rely on?
Yeah, quite often, especially in the case of consumers that don't have a lot of credit history. So, young consumers, folks that haven't been well served by the banks, often find themselves in this catch-22, where you need credit history to qualify for credit. But where do you start? So cash scoring can show that people have the ability to afford the loan or the credit card they're applying for, that they pay other bills on time. All of that information exists. It just requires that lenders think outside of the traditional credit score and adopt some of these new technologies like what we're developing at Petal.
So can you give us an example of the credit that Petal now extends to minorities, other credit invisible populations?
Absolutely. So Petal is a new kind of credit card company. And we work with a bank partner to offer a couple of different technology-enabled credit cards that are really designed to help folks to responsibly establish and build credit. Our products typically give people access to more credit at better rates than they would otherwise qualify for. That's enabled by the cash scoring technology. And then once people qualify for the card, We provide a modern mobile application that helps people to responsibly manage credit. It gives them access to their credit score, budgeting tools, subscription management, a variety of different things to help people to be successful in establishing and building their financial lives.
One thing we haven't brought up yet is cybersecurity. Obviously, that's a big concern. Fraudulent accounts and identity theft can wreak havoc on someone's credit score. We all know someone that it's happened to. What's the evidence that cash scoring is safer and it's more resilient to against this kind of fraud?
Yeah, well, I mean, the more data that we're using to understand the consumer and who they are, the harder it is for a fraudster to take advantage. This information makes it a lot more clear that you're dealing with the person that you think you are, and importantly, the information that's used for cash scoring. So folks sharing their banking history, they're able to do that directly from their bank to their provider with no credit bureau in between. And of course, the credit bureaus have been the source of the largest data breaches that we've seen in the industry.
And very quickly here, how much does cash scoring depend on banks sharing information with each other? If you're denied a loan from one bank, how much does that, or your account is deemed in bad standing with one bank, how much does that contribute to your cash score down the road?
So I think the key is that it's not about banks sharing information as much as it is about consumers being put in control of their own data. So the information that describes your banking history is actually your property. It's not the property of the bank. So this is the same thing as printing out your bank statements or taking your bank statements that you got through the mail, stuffing them in a shoebox and walking them down the street to a provider of your choosing. We just do it electronically, so the whole process can happen in seconds.
Got it.